Well, good morning, everyone. Thomas Montgomery. It is a beautiful Wednesday morning, July 10th, 2024. We get together most weekday mornings at 8 o'clock Central to talk about strategies, tips, techniques, share success stories, and hopefully help each of you succeed. We welcome both clients, prospective clients, as well as distribution partners and prospective distribution partners. So very transparent approach. It's okay for everyone to understand how the model works. Everyone has economic incentives. The clients, the participants that we help, their incentive is to be able to access capital to start or grow a business. And our distribution partners are looking to generate really an extraordinary income for themselves by simply referring in to their landing page. And all distribution partners should have a free landing page. Today, we're rolling out a very special resource, and it's relevant because we often are finding that we have clients who don't meet traditional underwriting criteria. So, what do we know about getting business loans? Well, we typically will need a loan package. The loan package has the business plan and the financial projections. So that's so the lender understands what the business does, how much money they'll need, what they're going to use it for, and do they project to be able to pay the debt back over time. And then that is encapsulated by the three C's: credit, collateral, and capacity. Frankly, I think there's a lot of small business owners out there that wish there was no underwriting. It's just like, just give me the money. Just give me the money. But that's too good to be true, right? Because there's someone on the other side of the transaction. There's a lender, a bank, private lender, alternative financing company. There's someone on the other side that their money is at risk if the borrower doesn't pay them back. So there's always going to be underwriting. There's always going to be underwriting. But the truth is, different lending sources have different underwriting criteria. In general, the three C's are relevant: credit, collateral, and capacity. Capacity meaning cash flow. However, think of it as levers, and you could turn or knobs. You could turn the knob down where you need just a smaller amount of credit, or you turn the knob to the right, like it'd be turning the volume on a radio, up to high, where a higher credit score is required. We have the opportunity today to roll out a resource that is going to enable a lot of small business owners who wouldn't have otherwise qualified. So let's go ahead and get started with our content today. So we just rolled out bad credit business loans for startups.com. That's about the world's worst URL, right? That's a long domain name, but guess what? It talks directly to our conversation today, which would be business loans for bad credit business owners for startups. Because another variable that you often will see is that some lenders require a certain time in business. And very often, the time in business requirement is often 2 years. That's the norm. So there's exceptions, of course, and we have a number of exceptions. But the norm would be a 680 credit score, at least 2 years in business, and at least $10,000 a month in bank deposits. Well, that's great if you meet that criteria, but a lot of small business owners don't. Here we're going to hone in on a couple of the variables where we're finding an outlier resource in terms of credit and in terms of time in business. So loans that are available for startup businesses versus those that are 2 years or older, and those that have bad credit business owners. So with that being said, bad credit business loans are for business owners with poor personal credit and or weak financials. We have now built, rolling out today on July 10th, a consortium of direct lenders. Let's talk about this term, direct lenders, before we go on. Loan brokers are prevalent in the marketplace, right? You go to them and then they shop the client's credit and often create a bunch of inquiries. Who wants that, right? We don't want that. So we want to work with direct lenders. So the underwriting is done with the same organization that literally has the money to loan. So that's what we mean when we say direct lenders. Now, this group that we're working with, very well established. They have already funded over 2,000 businesses. I suspect that if we can all get on board with this, we can double that volume over the next 30 to 60 days because we have so many of you who are talented, smart, motivated distribution partners, and we have a ton of clients that are coming in that have issues with traditional financing, which could be their time in business and or their credit. So the point is that this consortium of direct lenders is focused on bad credit borrowers. And we'll talk more about that, why that's not too good to be true in a second. There's always an impact of someone not being strong in one of the 3 C's, but we'll get to that in a moment. So focusing on businesses that would have not met traditional bank underwriting standards due to credit, income, or time in business. Again, if you have any questions, comments, concerns as we go through, just go ahead and type those into the Q&A box, question and answer box of Zoom. It's like a chat box. So our bad credit business loan program for startups is a great option when traditional financing is not a possibility. So it may be that you and I have some clients that we need to get funded that need to start with one of these bad credit business loans, but then move into traditional financing. Or it might be that they're able to meet their entire capital raise needs with this option itself. To open it up here and talk about some of the key elements. So this is not too good to be true. Some people look at this and say, oh, no, that can't be true. It's absolutely true. So the minimum credit score, of course, the higher the credit score of the owner, the better, right? There's no alternative to that. Great credit's better than poor credit. But our group of lenders will go as low as a 500 score for the business owner. Now you might say, well, if it's a business loan, why do they care about the business owner's credit? Because this is business financing, not personal financing, just to clarify. Well, if it's a really new business, the business probably isn't credible yet. Now we could wait and build the credibility of the business, and then the business owner's credit would not be an impact to the underwriting, or not as much. But here we're talking about startups, right? So this is an early stage business. Therefore, the business isn't credible on its own yet. So of course, they're going to look at the business owner. So going down as low as a 500 credit score is crazy good. That's very unusual. That's what we call an outlier. Often you'd need to be in the 600s or higher to qualify for business loans. So this is a remarkable resource that you and I have to go help people with now. Big deal. Now you might say, well, if you're thinking holistically, you're thinking strategically, then you're thinking, well, wait a second. Why would the lender agree to take on someone so risky? Now, it's interesting when you talk about credit. When I talk to people that have bad credit, often they see themselves differently than the rest of the world sees them, right? The rest of the world sees them as high risk, that they always have an excuse, a reason. But why would the lender be willing to take on a high risk client? Because these are obviously high risk. If you have a very low credit score, it means either you've not established credit as an individual, or you've established it and you've not met expectations. Well, they see a niche, and the truth is the interest rates are going to be higher for this program than SBA loans or mainstream lending. So there's a cause and effect, as I alluded to earlier. Otherwise, it'd be too good to be true. The default rates of people on this loan program will be higher than the default rate of borrowers that have normal credit, that have good credit. So there is a cause and effect. So if you have a client that says, well, wait, no, 12% is too high, I'm not going to do that, then that's fine. Then we need to work with them to improve their business's credibility so they have other options. This is call it, if you will, a subprime business loan. It's good, it's reasonable, and frankly, I don't think many people would say that 12% is abusive or predatory, but it is higher than prime rate, so it is higher than what they might get otherwise. So let me pause for a moment. What feedback do any of you have as we're digging into this? What's your initial response? If you can type it into the Q&A, I'd love to hear your input in terms of if you think this is as big of a deal as I do and as we do in terms of being able to help a much broader set of the market, or at least help them earlier. Maybe the clients are trying to move their way to qualify for traditional lending, but they need some funding in the interim. This could be used as bridge financing, if you will. What I thought was really interesting when we were visiting with them about their underwriting criteria, we asked, because we see this sometimes, a lot of times early stage businesses, they don't have much in their business bank account, and sometimes it even dips below zero. So we wanted to clarify before we started piling people into this new program, hey, what if the client doesn't have a real strong bank record? And they clarified, which is amazing, the client, and in fact, can have negative days in their bank account up to 4 times within a month. And if you know anything about business credit, business funding, underwriting, that's amazing. In many cases, this would eliminate someone from a loan. Here, not only can they have had it happen to them once, twice, 3 times, but even 4 times. We have to take them through underwriting, of course. There's always going to be underwriting, right? We covered that earlier. It's too good to be true. Stop thinking, if you are thinking, oh, there's no underwriting, people are just going to give money away. No. That's too good to be true. So there's going to be underwriting, but these direct lenders will go up to $1 million. So what are we going to do if a client needs more than $1 million? Well, we could either stack loans. We could do this one first, and then as they qualify, go to other loans. Or maybe this isn't the right solution, because if it were too good to be true, none of this would be criteria. It'd be, oh, you can get up to $1 billion, you can have no credit, and the interest rate's going to be 0%. That's too good to be true. So I'm giving you real, transparent numbers so you understand what we're dealing with. Keep in mind, as an affiliate, though, and I know sometimes we battle back and forth, as an affiliate, your job is not to go consult with clients about our program. You're not trained or supported to do that. As an affiliate, you do 2 things. You refer people to your landing page, and this is the new landing page for the bad credit loans, which it feeds in the same to the funding proposal, by the way. But you refer people in and you get paid. You refer people and you get paid. Sometimes we have affiliates that don't understand what affiliate marketing is, and somehow that they want much deeper involvement. Well, we have a different role called a branch office. If you want to be a branch office, then you go out to the marketplace under your branding. So it's called white label or private label, whichever you want to label it. You control the client's contracts and pricing, and then there's much deeper training. But as an affiliate, we're going above and beyond letting you know what's available. But as an affiliate, your job is to refer and get paid. Now, the payback period is another consequence. So I told you, by going to low credit scores, there's going to be some consequences. And we already said the interest rates are going to start at 12%. So that's above prime. The other is the maximum payback period is 36 months. So for an SBA working capital loan, we might be able to go 120 months, 10 years. Here it's 3 years. So it's a shorter payback period. But there's always going to be give and take, right? When we're helping folks that have not proven that they're credit worthy, there's going to be consequences. One of which is we're going to be looking at a little bit higher interest, still fair, still competitive, but a little bit higher interest and a little bit shorter payment terms. So we have to go into that eyes wide open. Again, no middleman. We're working with direct lenders on this campaign, and that's important. No hidden fees. Competitive rates. I guess we could debate that. I have some clients that come and they expect to be at prime rate, which is around 8.5%. They say that they're no more risky than what Wells Fargo or Bank of America is, and they should be able to borrow money at the same rate that large banks do. Well, Maybe that's the case, but here we're going to be looking above prime. And then fast funding. I have a couple of questions about fast funding. In most cases, it's less than a week. So the turnaround is quick. We're going to work with the client to make sure that they're ready to apply before they apply, make sure that we have the documentation that's needed. But fast funding usually less than a week. So it's certainly an expedited program. So I think this is going to be very attractive for bad credit borrowers that have a startup business that needs some quick funding relatively affordably. And no, there's no upfront fees for that, by the way, and it's asking. So in general, what we do in our model, you and I, what we do is we are creating fundable businesses. That's what our role is. We're considered technical advisors in the lending world. We're not lenders. We don't loan any money. I've had people come to me and say, well, how much money have you lent? We don't loan any money. We're not a bank. We're not a lender. We never said that we were. We're technical advisors. We help clients become fundable because they need help. There's plenty of lenders, right? If they're already credible enough, they can just go to the lender. They don't need you and I. But in many cases, they don't have the loan package prepared, and they may need help with one or more of the 3 C's. And that's what we do. So it's valuable, it's needed, it's credible. All right, so let's open it up for questions, comments, concerns. As far as feeding in, you'll be able to use your current landing page. This is a prototype of one that's been developed for this campaign. So in case you can't read it, if it's too small, it says bad credit business loans for startups. Bad credit business loans are for business owners with poor personal credit and or weak business financials. Over 2,000 businesses funded already through our direct lenders. Minimum credit scores as low as 500. Interest rates as low as 12%. Loans up to 1 million. No upfront cost. 100,000 guaranteed. Complete the form below. So if you wanted to introduce this to someone, this is pretty much the paragraph that you would say. I wouldn't say a whole lot else because we want to avoid our affiliates saying anything that's untrue and creating unrealistic expectations. But as always, when clients come through here, we're going to match them for what funding offers they qualify for immediately, and then work with them from where they're at to where they need to be to qualify for the larger amount with the guarantee of at least 100,000. And that's in writing. All right, so Faze asked about offers, and Faze is interesting. Faze was a branch office with us up until yesterday, and yesterday he sold his branch office to Hamid. So Faze, thank you for still joining us. I'm glad that you're still involved, and that is an example. Any of you that have a branch office, and if you determine that the branch role is not the right fit for you, we can literally facilitate the sale of your branch office to someone else, and then you can just simply be an affiliate. Because the difference, again, branch offices are white label or private label, contracting under their own name, under their own paperwork, setting their own rates. They're more involved. So some of you may want to be a branch, but for most, the affiliate role is the way to go. Just simply sending in people and getting paid and not being burdened with any implementation or customer service. But Faze asks, do the clients have to accept the offers? No. Our contract is written where clients do not have to accept offers that they do not want. We don't feel like that would be fair. So the offer will be extended to them, and if they don't like the offer, they do not have to accept it. Rather it be any variable. Anything that they don't like about it, they can walk from the offer with no cost. Good question there. And Cliff was asking about fast funding, and someone else asked about that too. So I answered there, and that was what I'm hearing within a week in most cases. So it's an expedited underwriting. But again, the key is we're going to work with the client to get their package ready before we go to funding. And that's going to allow the funding to happen quicker. That's our role in this. All right, and that was asking the same thing about timeline. We'll just say within a week. Also, Annette asked any upfront fees. So no, the lender doesn't charge any upfront fees. And then the clients that are coming through our funding proposal campaign do not have any upfront fees. David asked about lending. So I am confident that the max is $1 million, and I'm pretty sure that's a hard max. So if a client needs more than $1 million, we're going to have to either stack loans or just look at a different lender. And then I guess he asked about minimum. I'm not sure what the minimum is, because with our contracts, we're promising at least 100,000. So David, we often don't think too much about anything below 100,000, but it could be that they get less than 100,000 through this campaign. Then we invest that money into their business, and then they grow and they can borrow more as they become more qualified. So it may require multiple steps, but there's going to be underwriting done, right? So we'll put together a loan package based upon the credibility factors of the client, see what they get. If they like it, they take it. If not, we keep working and move towards what they would consider a better offer. David also asked, what about current clients? Yeah, so that's fine. So you all have a landing page, and frankly, it looks almost like this. This content is customized to this campaign, but your landing page is the same. It feeds into a funding proposal request, and that's where this goes as well. So this just has some different marketing based upon the target market. So with that being said, yes, any of your current clients, of course, would be eligible. Our service model is to have your clients schedule weekly calls. There's 7 or 8 of us that act as advisors. So every client should be assigned myself or one of the others. And so the service model is for clients to schedule weekly calls. And so certainly we can go back and revisit any of the current clients to see if this new resource might be a fit for them. It's not a different contract. It's coming through the same way. So as long as a client came through your landing page, which if you don't have one, let us know and we'll get you a landing page. But once they've came through your landing page, requested a funding proposal, they get a text. The text asks, do you allow us to communicate with you via text? They type yes, YES, and then 1 minute later, they get the funding proposal application. They fill that out, and that's what starts the client relationship. So this isn't a different contract or a different application. It's just another funding source that can be accessed through that process. All right. And yeah, and that's as and similar. Yeah, so it's the same contract, same process. Take them to your landing page, have them request a funding proposal, and then this is a funding option through the same program. All right, well, we'll wrap it up if there's no more questions. So I think we have a great opportunity now to help more people. Many people find that they're not able to access business funding because they have some credibility barriers in the not from my opinion or from your opinion, but from the perspective of lenders. Often it's based upon their credit is not so good, or that they're a new business. Those are risk factors for lenders, right? That's just a matter of fact. Well, what we have now are some options to help individuals that have early stage businesses. And we could always find funding for early stage businesses, of course, but there are some loan programs that do require more time in business. But the key here is we can help people that have both bad credit and a startup business. And so we'll work with them. Once they become a client, they're assigned an advisor, and we work with them to get what they qualify for right now. And then we work with them to get qualified for a greater amount of funding based on what they want, what they need. And of course, we have a written guarantee to get them at least 100,000. That does not mean that they'll get 100,000 necessarily from their first tranche, their first round. They may or may not. That's really based upon their underlying criteria, their credibility. But then we work with them to get them credible enough, at least for 100,000. And we've discussed that before. Any other questions or concerns? If you're an affiliate, this should be great. This should be great. You have some new talking points. If you need to see where the talking points are, they're on. Let's pull that back up. The talking points are on bad credit business loans for startups.com. That's this landing page. So you can go back and refer to this paragraph. That's probably about all that you need to be saying to someone. And then you drive them into your landing page, not this landing page, because this landing page won't track to you. But each of you should have your own landing page that you refer them to. And if you don't have a landing page, let us know, because we need to resolve that. Everyone should have a landing page. All right. Well, thanks everyone. Appreciate your time. I hope you're as excited about this as I am. It's the real deal. Again, over 2,000 businesses have already been funded. So no, we're not trying this out first on your client. If you individually want to go through it, you can. But let's enroll clients and let's get clients engaged so we can get them funded. Thanks everyone. We'll see you back tomorrow morning. Bye-bye.